My next guest says the uncertainty over the bank remains a risk to the broader market. Joining us right now is Will McGough, Stadion Money Management Portfolio Manager. Good to see you. Thanks so much for joining us.
Thanks for having me, Maria.
So, yeah, that's the worry, right? That this company has a huge derivatives portfolio. If they go down because they have all of these costs that they have to undertake, they're going to have to sell that portfolio, and that's going to impact the broader market.
Correct. That's the systemic risk that everybody's worried about right now in the market is the counterparty risk. So if Deutsche goes down, who's behind it? The same thing happened with Lehman in 2008, but that was a bad market environment. We're in a pretty good market environment right now near all-time highs, so the market might be able to absorb it better now than it would have in 2008.
What do you think, Kevin?
Yeah, I think one of the biggest issues we have is that if people would start pulling assets away, and then that'll be systemic throughout and reverberate throughout. Not only, it's not just a Deutsche Bank issue, it's the entire European central banking issue. And Deutsche Bank has their hand in shipping, oil, you name it. So the minute that market locks up and the financing market locks up, no business activity is happening. So you'll see it come in through the manufacturing numbers. You'll see it come in through investor confidence. I mean, it would be very bad. They have $2 trillion in assets.
Dagan, you got breaking news.
Yeah, Deutsche Bank, essentially a few things going on, acknowledging the severity of its situation, selling its Abbey Life Insurance unit to Phoenix for about $1.2 billion. That will help boost its capital position, but by very little. And then there was a report out earlier that Germany, the government, was working on a contingency plan for Deutsche Bank as it's selling assets, and the German finance ministry has since denied that report.
Well, here's one of the
Wait, let me finish.
Yeah.
That the German government is not working on a bank rescue plan, according to the finance.
And we know that Angela Merkel earlier this week said we're not going to help the bank. No aid.
Why is because they raised contingency bonds. They're trading at 73 cents on the dollar that can automatically convert to equity. That's why Deutsche Bank and everybody's saying we don't need to raise money.
How significant is this, Bill?
It could be very significant, and that's really the systemic risk that could come into play. It's just what's going to happen, what's the fallout from it, how far are they going to push it, like they did with Lehman. You know, nobody thought after Bear that they would let Lehman go under, but they let Lehman go under. So this could be the first domino to fall. We don't know. We're just going to have to watch and see what happens.
Yeah, and then the capital issue is really the one. I mean, do they have enough capital to deal with like $14 billion that they owe the Department of Justice, for example?
It's hard to tell. I mean, with reporting only being quarterly, it's really hard to get transparency into what's going on at these banks.
Yeah. But the fact that they went out and sold another unit, this life and this insurance unit, Abbey, and raising not that much money.
Following the Alex Brown sale as well.
Exactly.
So investors stay here in the U.S., right? Is that where people should position in these type of news?
Yeah, I mean, one of the interesting things about Europeans is they have very low equity exposure. I think the average European has like a 20% equity exposure, where here in the U.S. we have much higher equity exposure. So the risk is potentially smaller towards investors in Europe just because of that behavioral bias they have. So more assets should flock to the U.S. We're near all-time highs, so it's a good market environment. It's just a matter of how the market absorbs it.
Real quick, $3.6 billion in assets under management. How are you allocating that money?
So right now we're, pretty much geared towards equities. You know, we're at or near all-time highs. We're very positive that the NASDAQ and technology is leading. They've made new highs where the S&P is still underneath the highs that we made a few months ago. And small caps are also doing well. So the speculation is there. It's just a matter of getting the S&P in gear with the NASDAQ, and then we could be off to the races.
Does the election matter to markets?
The election, as we get closer, could raise volatility, and it certainly does. I mean, you can watch the Hillary-Trump spread, and that's, drives markets up or down, and the Mexican peso is another thing. So when people start keying in on these drivers of markets, and they change from time to time, that's how markets move and trends follow, and people make investments for, whatever the market could do.
Right. So the bottom line is, if Trump wins, what does the market do? If Hillary wins, what does the market do?
It's a tough call. I mean,
I know it is. That's what. But you're here, so we got to ask
you. Saw during the debate the futures popped when it looked like Hillary was winning,
because of stability.
And the betting markets gave her, I think, a four-point additional edge over Trump.
The market wants Hillary to win, obviously, because of the risk-on environment during the debate and with the peso. But that said, the market also thought the Fed was going to hike, and they didn't. So it's the market, is it a fake out or a trend?
People say the market's going to go down because of Donald Trump, because of the uncertainty of some of his policies. They don't know how it will play out. They know that Hillary Clinton is a crony capitalist, and she'll continue the policies of the last administration, and that's just the fact of the matter.
Yeah, but at some point, a 15% corporate tax rate has to be positive.
Yeah.
Yes, of course.
And higher capital gains tax rates has to be negative, which is what she
wants. Which is a huge fear for the market.
And also 10% repatriation. I mean, that would bring flow of money back.
Oh, Will, good to see you, my friend.
Come
back soon. Will McGough there.